running a business without peace of mind, it's expensive, it's excruciating, it's scary. You're basically operating your business as if you were a moron. And I'm telling you, I've been there, I've done that. I'm not judging you. I've been there, I've done that, and sometimes I catch myself doing it still. But you put systems in place and you surround yourself with the right people who can call you out on it, who are empowered to call you out on it, who are incentivized to call you out on it. Think about what happens when you've got peace of mind when it comes to your team. Peace of mind that you hired the right people. Peace of mind that you hired the right people because you took the time to think through what you needed the people to do. You took the time to create a scorecard for what you were looking for in an employee.
You're listening to the Profit First for Lawyers podcast, the official companion show to the book Profit First for Lawyers by RJon. Now, this podcast is for you if you want to bring home more profit while working less hours in the office, spending more time with your loved ones doing the things you actually want to do, and turning your office into a lean, mean, profit-breathing machine. So if you're tired of working for your law firm instead of your law firm working for you, stay tuned for some really practical insights that will get you the results you've always wanted. It's time to put your BS aside for the next few minutes and put yourself, your family, your firm, and your profit first. Welcome back to another episode of the Profit First for Lawyers podcast. I'm your host, Carly. And today we are closing out our 3-part series on some important financial reports that lawyers love to complicate unnecessarily by finishing things off with financial expert and author Greg Crabtree. Now, if you didn't catch the first part of Greg's interview, we've got that linked in our show notes below. Definitely take a look at that. For now, let's pick up where we left off. When last we left our heroes, Greg had just finished talking to us about the importance of taking risks based on data, and how doing so can lead to immense profits and higher professional satisfaction. All right, take it away, Greg.
Now, here's the thing. Our data, one of the things we also do is we monitor 100 of our clients that are all different industries all over the U.S. that we use as the simple numbers economic model. We call it the simple numbers 100 company model. And that is our read of the economy in the U.S. And we personally think it's far more accurate than the government's data.
Well, what about the economy and its part in some of our decision making right now?
What that data is telling us is the market has slowed. Matter of fact, if you really factor in inflation, I would say economic growth is actually 0 to negative at the moment. And so service providers like the legal industry, you got to take one further step. You know, we're no longer a all up, all flat economy. We're 2/3 up and 1/3 down significantly. And, you know, unless you're really good at getting paid, you know, you got to be careful. I mean, am I going to work on, you know, customers who are going to struggle paying me? Because the whole, you know, we've just come off of what I call the participation trophy economy for the last 20 years. I mean, that's probably the greatest economic growth that we've seen.
Participation trophy economy. Oh, Greg, that cracks me up. Okay, well, if that's where we were, what would you call the part that we're in now?
We're now in the street fight economy. You got to go punch your competitor in the mouth and take their business away from them if you want to grow market share. Because in the past, we were growing by maintaining our share of the growth in the market. Now you got to, the market isn't growing, so you got to actually go gain market share and take business away from other distinct competitors. So you'll see a competitive landscape of 15 companies shrink to 10 to 12. But the 10 to 12 that survive, they're going to be actually better businesses than it was when it was all 15.
Whew. That is kind of scary.
Well,
kind of
it's
scary. I mean,
scary, but it's actually an opportunity though, because I think if you're truly in the entrepreneurial game, you're going to like it better because it's going to flush out the weaker competitors. And I think that's a good thing.
whew. Well, let's go into maybe a little bit, Greg, of how do our listeners take advantage of knowing that this is important, right? How do they put this into practice so that they can see some of those big profits that your clients have seen from paying attention to their labor efficiency ratios?
So here's the thing I would say. Total labor efficiency ratio, the 2 to 1 that I've been talking about, that's a health diagnostic. I can look at that on a 3 month period, a 12-month period. Be careful of 1 month periods. I can use it as a 1 month target. The months are very highly erratic for everybody for the most part. So I can use it for targeting, but just don't beat yourself up on a 1 month. Always look at least what we call a rolling three. What are the last 3 months? But hey guys, I'm only talking about two numbers. Give me net revenues after client expenses that are passed through, and then give me total labor, which is gross wages. Don't add payroll taxes. If I'm paying a contractor that's an individual, but I'm not trying to be IRS compliant on wages. I'm trying to say, is this an individual that I'm billing for? Count them in your labor mix. Because we do see in the professional world where I will bill through an independent contractor, but generally that contractor gets a bigger pay amount because they're turn on, turn off. And I'm generally only getting on an individual labor efficiency ratio billing of that person, might only be getting a 25-cent markup for every dollar I'm paying them. But I got to look at that from a realistic standpoint and saying, gee, I mean, maybe I should hire an employee to do that if I got enough billing and pay somebody a lot less and make the appropriate, multiplier and then I can take that on in a billing practice where I know revenue by person and wages by person that bill. I can calculate individual labor efficiency ratios, which for junior associates is a 4 to a 5. Now, and I'm talking about total, not on a per hour basis. That's cheating. How much revenue did they produce? How much did I pay them? you know, Utilization and realization are secondary flawed measures at best. I'm not saying throw them out, but they're not the prime. The prime measure is how much did I bill for you? How much did I pay you in gross wages? And looking at that multiplier, and don't look at it as a percentage. We want to make the revenue the numerator, that number on top of the fraction, for those of you that are fractionally challenged. The numerator is revenue, the denominator is the pay number, because pay is the input to the equation, revenue is the output of the equation. And that's a way. And once you stack rank everybody who's a producer, sit down and have a meeting with the leadership and say, why is Fred a 2.1 and Mary's a 4.5? And yet we think they do the same thing. Something's broken. Is it the pay? Is it the productivity? Now you got to look at everybody in kind of a similar class, but it also tells you, you can also look at it by line of business. I mean, we do three things in our office. We've got a distinctly different leverage ratio for each one of those divisions. And that's how we decide, which is the one that we want to push, which is the one that we've actually got to improve operational performance before you push it. I don't want to grow something that's broken. I want to grow things that work really well.
I really like that. I don't want to grow something that's broken. I want to grow something that's doing really well.
That's
I
right.
feel like that's kind of obvious when you point it out there.
Well, but
But
but see, entrepreneurs think they can grow their way out of lack of profit, and we call that
Mm,
stage one of denial. Um, so you gotta fix it before you grow it. Now, I get it if it's in the launch phase, but once something is a known, it better be profitable, or else you got some fixing to do.
yeah. Oh, that's great. I wonder, Greg, what's the best formula for figuring out your labor efficiency, labor cost ratio between your direct revenue producers, right? Your sales team, or the team that maybe shares a little bit of that revenue, right? Like if you're in a law firm and you have your receptionist schedules the call, but they don't directly produce revenue. Are they part of that matrix because their labor cost is included in your general expenses?
They're management labor. Now, I used to call it admin labor, but the people who thought they were managers felt slighted because I called them admin. So it's like, listen, management labor is anybody who's not direct. And now I can have some management labor that do bill a little bit. And so my rule of thumb for professional practice is if you bill 30% or less of your time, you're management labor. You're spending the bulk of your time. So what time you do bill, it's just helping the overall productive team be more profitable as a team, but yet that revenue attaches to your salary. And so what you're doing is the time you do bill is lowering your administrative labor costs to the practice. You're getting some cost recovery of being a fractional leader rather than a full-time leader.
Can you give me an example of how that might work? I'm trying to picture it in my head.
So if I'm the practice manager and I'm making $250,000 a year in salary, but I bill $100,000 for various projects just because of my specialty, in essence, I can really look at that and say, I'm really spending $150,000 worth of value as being the practice manager because I'm not full time. And to be quite honest, most practices don't need a senior full time person. I mean, until you get to be a big, big, big firm, you can't justify expensive people in the management matrix. What you're trying to do, you generally a professional services model is highly paid producers that are given strategic objectives and guidances to go do their work, but all of the labor that's managing them for the most part is in direct labor with them. And so I have a really skinny management labor structure as a professional services model. And so it's what we call a low direct labor efficiency, high management labor efficiency labor strategy. Now, we see this in some IT service firms. They'll hire senior techs, and but they'll have really inexpensive amounts being paid for the leadership, maybe one or two leaders, because the senior techs know what to do. But there gets to be a point that those people want more and more money, and you can't bill more and more for what they do, and that model breaks down over time. You have a balanced model where I've got a reasonably moderate, kind of a midpoint direct labor efficiency, and I've got to then have a little more management labor to guide those people. And then I can have essentially a scaling model where I've got less expensive direct labor, which means I've got a high labor efficiency lever, but I've got I've got a lower management labor efficiency. The two work off of each other. I can't go high, high, low, low. If I have high direct LER, high management LER, um, then I'm going to break because nobody really knows what they're doing. We're running ahead of ourselves. If I have a low direct LER, low management LER, I'm not going to be profitable. I'm going to fail from an economic standpoint. And so you can win with a high low or low high with either one. I just got to stay within the two overall. So the two overall, like I said, is a health diagnostic. The direct labor, management labor choice that you make of how you split it, that's a strategy. There's a way to win with each strategy. What you have to really be careful about is where does it allow you to move to next as the business dynamically moves across time.
Whew. I am trying
Is
to
that a
put
blue
into
plate
words
special
here.
for you?
Yeah, it did. I
That's
think sometimes the numbers
that's a
break my
meat
brain
and
a little
three
bit.
right there.
Yeah, it
Yeah.
does. Well, and I think too, it's such a because you have to look at your staff as humans when you're leading them.
Hmm.
But when you are planning for the future, when you're planning for your present, you kind of have to take that emotion out of it. I think that's what RJon said was one of his favorite parts about the labor efficiency ratio is it allows
Mm,
you to see the bigger picture, to
right.
not play favorites, to
Yeah,
not to get clear about what the truth is. And the
that's right.
truth of the
Yeah.
matter is that this employee who maybe doesn't have the best stories, maybe you don't like going out with this employee to lunch very often because their
Mm,
stories aren't as good, but maybe they're bringing in a lot more for you, and it
yeah.
helps you to be a lot more fair
It is
in.
unfortunate in the professional services world that the people that you think you need the most are generally the least profitable. And you have to rethink that and say, listen, I love you, but here's what I got to have out of you. If you want to make this pay, you can make as much as you want. Here's what I got to have if you want to make this. It's a simple transaction. And if you can't deliver that, I can't pay you that. Simple as that.
Yeah, I like that too. It feels like a much more um healthy relationship, and even as the employee, I think it kind of gives you a little bit more power, or empowers you to say, okay, this is what I'm bringing to the table, and if that's what I want to make, then I can make a case for that if I can bring this to the table.
So
I
the
don't know.
challenge is when you look at across your roster, you just have to be careful to not have any protected species on payroll.
Ooh, tell
And
me
and
more
in the
about that.
profession, yeah, so in the professional services world, we have some protected species. Sometimes they're family members.
Oh, yeah.
Those are difficult. And some of the thorniest professional service practices we've dealt with is where we had to get in the middle of family members to where one should be paid significantly more and one should be paid significantly less. But we've had some success in bringing this concept of people seeing the economic reality of it and going, okay, that's fair. If they produce, they get. If they don't produce, they don't get. Simple as that. The other is you can have some people you like and you just don't want to deal with it.
Mhm.
And this is not a problem unique to professional service practices. This is labor in general. I mean, I don't know if you've ever heard of Cameron Harold, and Cameron's a great speaker, a lot of good, great concepts. And one that I love that he always talks about is, he says, listen, when you look at everybody on your roster, look, close your eyes, picture everybody, line them up in front of you, and he asks this one question: would you enthusiastically rehire every person on your team today?
Oh.
And if there is any doubt, there is no doubt. And then he says, okay, for those of you that the answer was no, what time tomorrow are you going to let that person go? Not next week, not put them on a PIP, not, you know, you know. Now, granted, we got to stay within labor rules. If you've got a handbook, yeah, you might have to put them on a PIP because, but you got to put people through the paces of saying it's either up or out and looking at kind of the A player concept of, hey, I'm an A player because I meet the core values of the business, but I also produce to the top end of the business as well. That's an A player. And
Yeah.
and and guess what? A players want to play around A players.
Yeah.
A players don't want to play around B players or C players or D players.
No, that's how you get those memes that say the reward for a job well done is more work.
That's right. Yeah.
Oh, Greg, that was fantastic. Really a way to make some of these. And now I don't want to necessarily call it a complicated process, but I want to call it an easily complicatable process that people generally feel the need to overcomplicate, right down to brass tacks. Kyle, that is so great. There's a question I ask everybody that I interview, that I am always really interested in the answer, and that is, what is a piece of advice or something new that you're doing in your business or your personal life that has brought a lot of profit to you over the last year? And when we say profit, we mean RJon's definition, right? Which is
Hmm.
giving up something that you value less in order to receive something you value more. It's not always financial.
Yeah. I mean, for me, and I've done this really for the last probably 3 or 4 years, but it continues to evolve. And that's living more by the calendar as a way to manage activity and productivity rather than a to-do list. I don't have a to-do list. I have a calendar. If there's something I'm supposed to do, it's on the calendar. It might sit in my inbox as an unread email because I haven't put it on the calendar yet as to what I'm going to do, when I'm going to deal with it, or forward to my assistant to schedule something. But that has been an incredibly freeing, activity because when I'm done with work that day, I go home and I don't think about it. Or go to the golf course and I don't think about it because it's on the schedule. There's a time to either deal with the prep, a time to deal with the actual item itself, a time to deal with follow up of something, and that certainly has been a huge benefit. And I think in the professional practices world, we tend to under plan, scopes of work and execution of that work. And a lot of that thinking kind of came from one of our clients who had was really kind of a master in agile development strategy, and we had some discussions, and he did some training for our practice unit on how to apply agile thinking, to a professional practice. Now it's hard to do, but I'm telling you, I mean, if you are high output, high value practitioner, it's the only way to live, in my opinion. If you want high leverage, so
Oh, that is a great tip, Greg. I love that.
yeah,
Thank you so, so much. This has been so valuable for me, even when I don't own a business of some type, right? It's really changed the way that
yeah.
I think about my own contribution to the business that I work for,
Cool,
as well as new ways to work. This was really valuable.
good. Well, I appreciate it, and like I said, happy to chat anytime.
Would you enthusiastically rehire every person on your team today? Because A players, they want to play around other A players. Now, Nicole talked a little bit about this in episode 63, which of course we've got linked in our show notes for you. But I've always been so attracted to this notion of using the data to determine your hiring and firing choices, even as an employee myself. It is such a more ethical, more responsible, and even more loving way to be cared for, knowing that I, to some extent, can control my own destiny. By aligning my goals with the company's goals, professionally and financially, it's not personal, and that is a relief. And that's what we've got for you today, folks. Hey, thanks for spending some of your time with me. And if you found this episode valuable, here are just a few things that you can do today to take action. 1, visit our page at profitfirstforlawyers.com/action to download our free resources curated just for you. Now, as I mentioned, you're going to see a new one in there. We have our labor cost ratio worksheet to make finding your ratio even easier. So go check that out. Number 2, make sure that you snag your copy of RJon's book, Profit First for Lawyers, wherever you usually buy your books. And 3, please leave this podcast a 5-star review to help us be discovered by even more law firm owners just like you. And stay tuned for our next episode as I share one of my favorite, really fun behind the scenes clips from the recording studio that is extremely entertaining, but it's also really profitable. I'm excited to share this one with you. We'll see you then. Thank you for joining us on another episode of Profit First for Lawyers. If you're enjoying what you're hearing, tell a friend. And visit profitfirstforlawyers.com/action to download the resources that are going to help you put these concepts to work for your law firm. Your future self will thank you for it, and we will see you next time.